Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, June 15th. Firstly to the S&P 500, and here we see a continuation of the trend to the downside today that follows the previous day's trading, a large black body candle, and that follows the market finding resistance once again at the 2114 level of previous resistance. Some strong rejection down from that area, and on the candle that followed that rejection we saw the sellers taking control, being strongly committed and trading once again in a bearish manner through the Tenkan-sen, the Kijun-sen and the 2100 round number. Today we've seen some follow through, but it hasn't been strong. Even though we've had a black body candle, the size of the black body is much smaller than the previous day, so the amount of net momentum between the open and the close is smaller, but we also have this shadow on the bottom, and this coincides with the market testing down below the bottom of the Ichimoku cloud and into that highlighted yellow zone once again. And that's an area where we have seen strong buying coming in. Now what we may see here is the market attempt to retrace back up towards these levels, towards the 2093 level and 2100, but we're likely to find some fairly strong resistance there unless we see a strong bullish candle as we saw with the previous time that we broke out through that area. So a lot depends on how the buyers react to this price rejection from these support levels. Now just looking at the Fibonacci extension technique here, and we're examining the relationship of the current first time frame downtrend to the immediate previous first time frame downtrend, and here we've seen the market testing down through the 61.8% level, through the 78.6% level, being rejected from both of those areas and failing to close through the 61.8% level today. And it does suggest that there is a possibility of a change of trend to the upside, so we will be watching very closely tomorrow for a potential higher high and a higher low. Moving next to the Nasdaq 100, and some very strong trading to the downside for today. A market that's gapped down, and that gap will create a window here. And the gap may hold as very strong resistance to this market over the next couple of trading days. We've also seen the market test down to the important 44.21 level of strong support, and a similar type of candle here where the market's tested down through that area and we've been rejected to the upside from there with a largish type of shadow. And it's not the first time that we've seen that area hold. It has held on multiple occasions, so there is an opportunity here for the buyers. But with the gap overhead, the window overhead, it suggests that perhaps there is a greater amount of resistance than the previous time that we saw the market test down to that level, so we may not have the same result as the immediate previous past time. But we have seen a larger white body form, and the buyers take stronger control than we did on the previous candle. So a lot depends on how the buyers are going to react to the loss of control from the sellers on this continued downtrend. Now, if the market does breach down through this 44.21 level in a bearish manner, we could see the Nasdaq 100 trading very quickly down to 43.47. But if the buyers can breach through the window that was opened up in a bullish manner, we have further strong resistance overhead at the Kijun-sen and Tenkan-sen around 44.66. Then at the next window that was opened, and it ends at the top of this 44.83 previous level of resistance. Moving next to the Russell 2000, and here we see a stronger market than we saw with the previous indices, and we have a market that's bullish still in all three time frames, in a downtrend in the first term time frame, forming a lower high and a lower low, but a very small body and a large shadow on the bottom. And this is something of a hammer type pattern. It's not a significant trend to reverse, but the implications are there. The large shadow represents the sellers strongly losing commitment down below their Tenkan-sen indicator and getting very close to the Kijun-sen and the cloud, and that strong upside price rejection suggests that the next day we could see a change of trend and the market forming a higher high and a higher low. So the opportunity is here for the buyers, but this certainly is a much stronger market than we saw for the S&P and for the Nasdaq 100. Now, in terms of the strength of these markets relative to each other, what we're looking at here in the second chart, the subchart here, it's the relative strength versus the SPY. I'm looking at the ETFs now, so we're comparing the Nasdaq ETF, the QQQ, PowerShares QQQ Trust ETF, compared to the SPY ETF, which is the S&P 500, and we see on the relative strength comparative that we're just down around that lower band here, and it suggests that once previously when we were strongly outperforming the overall S&P 500, the Nasdaq 100 is now just underperforming. Also comparing the Dow 30 ETF DIA is the code, and also down around that lower band and just below the lower band, and has been underperforming the S&P 500 for quite some time. So here we have the more specific stocks in the technology space, with the Nasdaq 100 underperforming the broader S&P 500 larger cap stocks, but the narrower Dow 30 stocks, the larger cap stocks, against the S&P 500 broader large cap stocks, is also underperforming. But then when we compare the Russell 2000 index fund, the code is IWM, and compare that to the S&P 500 fund, the SPY ETF, SPY, we see the very strong outperformance, and the Russell 2000 has been strongly outperforming the overall general equities market, the higher cap stocks, for the last couple of weeks, and trading up above the Ichimoku cloud quite strongly, and suggesting that we certainly could see this market continue to the upside in that second term timeframe uptrend that the Russell 2000 is in. If we look at the momentum of the relative strength, it is still trending up. It is above the 100 line, outperforming, and suggesting that we could see continued upside. And now the next thing to do is compare the Russell 2000 Micro Cap Index Fund ETF, which is IWC, the code is IWC, and comparing that to the Russell 2000 Index Fund, IWM. And here we see the strong outperformance, trading up above the upper band for the last couple of weeks, and this suggests that the value has been in the microcap stocks in the Russell 2000. The smaller stocks are actually still continuing to outtrade the larger cap stocks in the market, so that's certainly the place that we should be allocating to. Looking at the momentum of that relative strength, strongly performing, strongly trending up, and the relative strength still has some solid upside momentum. Now, looking at the ETF itself in terms of Ichimoku, strongly trending up in all three timeframes, supported by the Chica span. We have a small body candle with a large shadow on the bottom, and potential for this trend to change to the upside, and for the second timeframe uptrend to continue